Guys, we have some very, very good news. Bloomberg Analysts has just raised Bitcoin ETF possibilities for this year, 2023, not 2024, from 50% to 65%. And once that comes through, we are going to get a lot of bullish sentiment because that'll make a way for people to actually safely get into crypto, at least in their eyes. So analysts at Bloomberg raised their estimates for the launch of a US spot Bitcoin ETF this year to 65 from 50, gain of 15%. But since it was 50 before, now it's 65. It's a 30% increase from before. The analyst said the SEC's seeming approval of Coinbase's Bitcoin trading platform is one indicator. And of course, Gary Gensler downplayed his role in a recent interview. So they raised their estimates from 50 to 65. Of course, like several major institutions like BlackRock, Fidelity, WisdomTree, and Valkyrie have submitted their ETFs. And I think because those are the powers that be, I think the SEC is going to find it very, very difficult to actually not let them launch an ETF. BlackRock and Fidelity would like to have a word or two with Gary Gensler, and Gary Gensler does not want to make those two people mad. Also, like Gensler would probably rather have BlackRock, Fidelity, WisdomTree, and Valkyrie have ETFs rather than just deal with Grayscale's ETF, because let's not forget, Grayscale is actually suing the SEC to let them convert their GBTC into an ETF. And the judge right now does not seem to be very pleased with the SEC. So the SEC are very, very likely to lose that case. And if Grayscale is the only spot ETF because the SEC has to approve it, well, then they're not going to like that. They'd rather have their masters of Fidelity and BlackRock in that position. And I do think that's part of the reason they'll accept the ETF. Obviously, we know the final date for the BlackRock one is in March of next year, but they're saying that they could possibly do it earlier, especially this year. I really, really want it to happen very soon. The first possible date, I think, is August 12th, but I still think that's a little too early. They'll probably extend it again, and then they'll have another 45 days until basically the end of September. I'm hoping by the end of September or late October, they'll actually have an ETF in place, because that would do wonders for the crypto market that's suffering a major bear call at this point. Well, it's not really so bearish right now because we've been trading sideways for a long time, but an ETF would actually pump Bitcoin up because there would be new inflow of money into Bitcoin via the ETF. The way the ETF works is people buy shares of the ETF, but since it's a spot ETF, BlackRock actually has to buy Bitcoin for every share of the ETF that its customers buy. So it is definitely a give and take situation, and it would actually make a lot more money flow into Bitcoin itself, unlike the futures ETFs, which can be supported by futures contracts, which are supported by futures contracts. So the raising of the Bitcoin ETF probability from 50 to 65 is a very, very big deal. That kind of increase, hopefully they continue to keep it. That kind of increase signals that the SEC is willing to back down from one of the crypto issues that it's basically been keeping hard on for us investors. And I'm very, very glad that is definitely the case. So very, very cool news. The Bitcoin ETF has increased to 65% from 50% this year, according to Bloomberg analysts. Etoro has been sued by Australia, and that's for its leverage product. Now, I'm not upset at this because it is for their leverage product. They're not suing them for a spot product. Leverage, I think, is the bane of crypto, and I don't think leverage should even exist in crypto at all because crypto is volatile enough. And most people that play leverage end up losing a lot to leverage because they don't really know what the hell they're doing. And I don't think like leverage like 100x should actually be allowed in crypto at all. I think like 5 or 10x in crypto should be like the market limit because 100x in crypto is just kind of like day gen gambling more or less, especially for a product that's already extremely volatile. Of course, like they allege that eToro's target market was far too broad and screening tests was very difficult to fail. I think they obviously like implement it that way so everyone can actually use leverage. People just don't really know how leverage works. They don't know how dangerous leverage can actually be. So that's why they've been sued with Australia's regulator, and they have obligations to act honestly and fairly, which they obviously didn't do with leverage. I think they made the test probably as easy as possible for people to actually pass. So like in the past few months, Australia has cracked down against crypto firms, including Binance Australia, and those offices were actually searched by ASIC. Major banks in Australia have imposed partial restrictions on crypto, citing scams and amount of money lost by customers. Of course, leverage is a huge culprit in that because people lose the most money via leverage, few 100x, and it goes 1% the other way. Unless you can provide more capital, you will get liquidated. So Etoro AUS is considering the allegations filed by ASIC in these proceedings and will respond accordingly. This is from CoinDesk. There's no impact or disruption to a service for clients of Etoro AUS and no material impact on Etoro's global business. And they're seeking monetary penalties, obviously. So, since they're actually trying to meddle down on or push down on the futures, I kind of hope they just get rid of futures like pretty much everywhere for crypto, because that is just a big, big way for institutional money to actually manipulate the market without ever buying crypto. And I don't think that should actually exist. I'm actually against futures markets for like most financial markets, especially for crypto. So I'm not really sorry to see this. If they don't touch the spot market, I'm actually perfectly fine with Australia's decision. Obviously, I don't want them to crack down on crypto this much, but if you're cracking down against high leverage futures, I'm really not too sorry about that because I do not favor high leverage futures myself. I think it is just a great way for people who know very little about how this works to get absolutely and completely wrecked with crypto. So not really sorry that this is happening for eToro. But I think eToro's main business will actually be okay. Our favorite senator, Elizabeth Warren, and another favorite senator, Bernie Sanders, want to get rid of a $50 billion crypto tax gap. And they're saying that crypto tax evaders are siphoning off billions from the government. So basically, they want the IRS to speed up these tax loopholes. Obviously, a lot of you will be against this because you like those tax loopholes. And they claim there's a $50 billion crypto tax gap, and the IRS and Treasury risk missing out on roughly $1.5 billion in tax revenue for 2024 if tax policy is delayed. And given the chance, tax evaders and the cryptos from Cointelegraph and crypto intermediaries are willing to aid them, will continue to game the system, exploit loopholes, and siphon off billions of dollars a year from the U.S. government. Now, this is probably true, but obviously crypto is not the only way to tax evade, and there are much bigger fish in the ocean, but they are targeting crypto because Elizabeth Warren, for some reason, just hates crypto. Not really sure what Bernie Sanders actually thinks. The senators are referring to a new tax laws outlined in the Senate's $1.2 trillion infrastructure bill. The bill aimed to increase tax reporting requirements for businesses acting as crypto brokers. Obviously, they want to basically push that everyone is a crypto broker, and this is something that a lot of other senators have worked fiercely against. So basically, I really don't want this to happen, and I don't think this is going to happen because I think there is a lot of resistance. While the bill has been signed into law, the Treasury and the IRS have yet to release their new tax rules. The agencies have until December 31st to publish and implement the rules, but the lawmakers are requesting they be put in place much sooner. So basically, there is this thing that's bipartisan, and they established new reporting requirements. I don't think they actually got it through that all validators and everything were part of this, but there are a lot of entities that have extra reporting requirements. And with those reporting requirements, I think it gets very, very hard to actually get around the tax loopholes, which will actually shore up more money. But I still don't think they're going to fix the problem with DEXs and stuff because I don't think they can actually fix the problem with DEXs. Elizabeth Warren obviously is trying to build an anti-crypto army. Bernie Sanders hasn't really said much about crypto. He's co-signed a number of letters headed by Warren seeking to impose tighter restrictions in the space. I think the government in this case is just really concerned about getting their money. They don't actually care about the rest of it. I think as long as they can get rid of the money laundering and tax evasion in crypto, or at least pat it down, I don't think Warren will actually care about too much else. But she is really, really adamant about closing all the tax loopholes in crypto. So we'll have to see how that goes. And of course, a recent poll commissioned by Grayscale Investments found that 59% of Democrats and 51% of Republicans consider crypto to be the future of finance, suggesting Warren's stance may not prove to be a vote winner among the majority of the population. So I don't really think this is a vote winner because both the majority of Democrats and Republicans see crypto as the future of finance. That's a very important number because you think Democrats are anti-crypto, but no, actually a higher percentage of Democrats than Republicans actually consider crypto to be the future of finance. So that is an important marker, and I think that is one that the political parties will actually pay attention to. Now, there is a chance because of Curve for you to pick up cheap DeFi coins. Case in point, AAVE. I think the fundamentals are still decently strong there, but they dropped 17% today. Why did they drop 17%? Because Curve had to liquidate some AAVE tokens. I don't know if they'll have to liquidate them in the future, but if you see these DeFi tokens drop, research why they're dropping. And if it has to do with Curve, that means like it's not really something with the project itself, and there's a good chance that the project itself will actually recover if Curve is the primary reason for the coins drop, like AAVE. So AAVE, you might actually have a chance to pick up some cheap ones right now, and it might do you well to pick up some cheap ones. Obviously, you have to do a lot of research. Make sure like Curve doesn't have to liquidate more, because they could go down substantially further if Curve has to liquidate more. But Curve does have a lot of these DeFi tokens in its treasury. It probably has to liquidate some because it lost so much money and they have to pay back some debt. But if these tokens' fundamental basis is strong, they will survive and they will bounce back. So you could actually pick up some at a very, very cheap price right now. So that's the news for today. Let me know what you think. Like and subscribe, hit that bell notifications button. Thank you and have a nice day.